Hey everyone, this is my first ever video on waffle trades on YouTube, and today I'll be teaching you the continuation model that has made me over $5,000 as a 16-year-old day trader. So yeah, let's get right into it. Some proof to just start off with. I got 3,500 USD, as you guys can see. If you convert that to Australian dollars, which is 5,300 Australian dollars, which is pretty sick if you ask me. And yeah, we'll get right into the continuation model. This is like the basis of it, but also if you guys do want to learn and get one-on-one mentorship, you can always join the Discord link in description. But yeah, let's get right into it. So this is the basis of my waffle continuation model that I'll be going over. But yeah, all right, so what are the few main things that we need for my continuation model? We start off with the drawn liquidity. This is arguably the most important thing I would say out of the whole continuation model. The drawn liquidity is number one thing, no matter what. Without drawn liquidity, you should not be taking any trades because this is what we're essentially targeting. And our draw, if we don't have a draw, no trade. That's my number one rule. Having a clear draw on liquidity. And you guys might be wondering, where is liquidity? Where does liquidity lie? How do you find a draw on liquidity? If you guys want to learn more in depth, you can join the Discord in bio. But I'll quickly give a quick like description on where do I look for my draw on liquidity. It's normally at session highs and lows. That's sometimes where I look. Drawn liquidity can be session highs and lows. It can also be data wicks. Data wicks. If you guys know what they are, data wicks are just basically news wicks, news highs, news lows, stuff like that. Another thing is FEGs. Yes, FEGs is a bit weird. I don't really target FEGs that often. It's not the greatest drawn liquidity, but FEGs can be a good way if you guys want to target. And I have used them. It does work, FEGs, to target them, but it's not my number one go-to drawn liquidity. So it's like a bit lower. And then there's another one that I'd say is equal highs and lows. If there are equal highs and lows in a high time frame, then yes, I will take it. But even then, equal highs, lows, they're not really the best draw in liquidity, but the first two are some of the strongest draws in liquidity that I personally always use and target. But yeah, next thing of my continuation model, what I look for is fast displacement. If you guys don't know what fast displacement means, it just basically means price action. You don't want price action to be choppy. You want it to be fast moving. None of this sideways diagonal bullshit, guys. You just want clean, fast price action. So if I grab it here, if price is moving like this, yeah, you don't want to be trading this. This is not fast displacement. This is just pure chop. I don't think anyone wants to trade this. Fast displacement is I want price to be moving to a clear section, like a clear draw. Like this, you can easily tell price is moving up. That's what I want. I don't want any slow, sideways, barcode, choppy PA. Nah, I don't look for any of that. You always want fast displacement. And fast displacement is one of the things I also look at. If there's no fast displacement, I'm not really looking for a trade for that day. All right. So what's the next thing I look for my continuation model is aligning the time frames. This is again one of the most important things. Being able to align the higher time frame with the lower time frame will save you so many losses. It just means going with the trend, because the whole point of a continuation model is to just go with the trend. You're not trying to go against the trend, not trying to do anything crazy. Just go with the trend, take your 1-to-1 RR trades and make your money. That's pretty much it. It's not that complicated, but you want to be aligning the higher time frame. So if the higher time frame is bullish, the lower time frame also has to be bullish. Like I'll give you an example. So if higher time frame is moving like this, the lower time frame should also be moving like this. And you want to be getting an entry where it gives you the best entry that is bullish. And I'll explain what I mean by this when I do a live example on the charts, a trade that I've personally taken. Next, for me to even enter, I want to see some sort of pullback to a rebalance of equilibrium. So if the first three things are there, displacement, drawn liquidity, and aligning the time frames, the next thing I want to see is a clear rebalance to an hourly, 15-minute, or 5-minute gap. This can be a bit discretional, depends on the day, but mainly 5 to 15-minute gaps, I want to see a fast pullback to it. Yes, you can take trades to the pullback, but that's not mainly what I trade. That's more of like a mech model that Blake would trade. But rebalance, I want to see a pullback to a 5 or a 15-minute gap, which is crucial for me, and that's where I'll be taking my entry off. Next thing I want to see is a highest time frame inversion. You guys might be wondering, what does that mean? I'll do a quick example right now. So let's say we're going higher, and the drawn liquidity, hold up, I'll just move these all up. So the drawn liquidity is up here. Let's just say the drawn liquidity is here. So this can be called our drawn liquidity right here. And this is what we're targeting. We have a clear drawn liquidity going into the day. And this is the trend. For me to target that drawn liquidity, I want to see price pull back into a fair value gap. Because I don't want to be taking trades up there. Like my risk to reward, like just look at this. My risk to reward is gonna be ass. Like what kind of risk to reward is that? That's under 1-to-1. I don't take trades below 1-to-1 risk to reward, and I max around like 1.2 risk to reward. But yeah, I want a good risk to reward. I want to make a lot of money. I think all of us want to make money, of course, trading. So I'll be waiting for some sort of pullback into the range. So what would I be looking for? I'd be looking for price to pull back into this 15 or 5 minute gap, and then I want to see price displace back up to that. So let's just say this is a 15-minute gap. All right. Example, what would I do? Once price pulls back into the 15-minute gap, I would be looking for the highest time frame inversion. You guys might be wondering what that exactly is. Well, I'll give you an example right now. So this is the 15-minute gap, the same one, that right here, same 15-minute gap, but this will be on the 1 minute time frame. So if I grab out my tool real quick, the path tool, so price has pulled back into this 15-minute gap, and that's actually a bad example, but hold up. So price has pulled back into this 15-minute gap right here. So what would I want to see? How do I know that price wants to continue going higher? How do I know that price just doesn't want to dump through it? How do I know this? Well, I'd be looking for an inversion, an IFVG, an inverse fair value gap, to tell me that price actually wants to continue the trends back to the drawn liquidity. If price respects the IFVGs, the FEGs, that's just telling me price wants to go lower, and I'm not taking a continuation trade. So I'll show you an example. So when we have the last manipulation leg, so the last leg that pulls into that 15-minute gap, this is the gap that I want to see get inversed. Okay, so what would I want to see from here? I want to see fast displacement. So I want to see price go down and displace. Literally in 1 to 2 candles, I want to see price displace through this fair value gap. That if we see this in 1 to 2 candles, that is fast displacement. That tells me price is disrespecting bearish order flow and wants to continue higher. This is very, very important. Knowing like you don't want to react. You want to react to the markets. You don't want to predict. I don't want to be like, oh, it's pulled back, it's gonna go higher. No, I want the market to tell me what the market wants to do. So in this case, I'd be looking for an IFVG that tells me, it confirms that the price wants to continue going higher. So I'll be looking for the highest time frame inversion. It makes more sense. I'll show you in a chart example. But let's say this is a 1 minute gap right here. But if you go to the 2 minute time frame, there's another FEG. And if you go to 3 minute time frame, there's another FEG. Whatever the highest time frame FEG from that last leg into the 15-minute gap is what I want to see get inversed, then I'm entering. It sounds a bit complicated, but I'll show you a chart example. So where would I put my stops? I would put my stops just at the lows here. And where would I target? I would target the drawn liquidity that is up here. This is basically what I'd be entering off. This is the trade I'll be taking, guys. This is my A+ continuation model right here. And I mean, it doesn't get simpler than that. You don't want to overcomplicate your trading. Most people are unprofitable because they do so much, like, you don't need it. It's so unnecessary. You don't want to do too much. You want to keep your trading simple, easy, quick to see. It's fast. Like, this is easy, very simple. This is what I'd see. And then I'll just target right here. Let's say my drawn liquidity on the day is up here. This is what I'd be targeting, and then I would like to see price go higher, 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 higher. Boom. There you go. And then halfway through somewhere, if there's a high made, I'll just put that as my break-even level. And once price hits that level, that'll be my break-even. I'll go break-even, so the trade is risk-free. That is my continuation model that's made me $5,000 as a 16-year-old day trader. Well, that's pretty much all you need, guys. But now let's go into a chart example, and I'll show you a trade that I personally took in the markets recently. So let's go to this trade right here. So if we go back, I took this on when? The 9th of October. Okay, so going into the day, we were overall, as you can see, price was a bit choppy. We had a massive dump down lower. And what did I wait for? Like I said here, the continuation model that I'll be waiting for. So if you go back here, what do I want to see? I want to see fast displacement. What do we have? Market opens, fast displacement. Do we have a clear drawn liquidity? Do we? Let's check. Yes, we do. Why? Because all-time highs are always clear draws on liquidity. If we're at all-time highs, I don't want to be shorting. I'll only short if market tells me they want to continue going lower. But in this case, market opened and pumped. That's sign of price act. That's sign of bullish price action, by the way. Right here, clear. Market open, fast displacement back up. Where? To clear drawn liquidity. I am always bullish until proven wrong on when we're trading on all-time highs. That's my number one rule as well. So price is pumping. No entries here. 5 minute time frame. Any pullback, we have a 5 minute FEG here. Nope, no pullback here. Nothing. We continue higher. Yep. I mean, I don't see a trade. I don't see any SMT. Nothing. So that's fine. All right. So now what happens? Price pulls back into a 15-minute gap. So if we go back here, what am I looking for? I'll pull back into a 15-minute gap right here. What do we have? A pullback into a 15-minute gap. Then what's the next step to my model? Like I said, I would scale down to a lower time frame to find what? The highest time frame inversion, like we talked here. So let me quickly find this and I'll show you what I mean. So we've pulled back into this 15-minute gap, as you guys can see right here. What am I waiting for? I'm waiting for the highest time frame inversion. As you can see, this is on a 1-minute time frame. There's a fair value gap here. Yes, there's a fair value gap here, but why am I not entering on a candle close in the 1 minute? Because if you go to the 2-minute time frame, let's just go to the 2-minute time frame right here. Where is it? Oh my days. All right, here. As you can see, if we go to the 2-minute time frame, there's another fair value gap. And as you guys know, high time frame is always better. So yeah, I'll be looking for the highest time frame inversion. If you go to 3-minute, there was no fair value gap on the 3-minute, so I wouldn't be taking this. There's no fair value gap on the 3-minute, so I wouldn't be looking for that. But the 2-minute is the highest time frame inversion on the last leg down into the fair value gap. So what do we see? I see fast displacement. You guys see this? Look at that candle. One candle, we full inversed it. Like I said here, what do I want to see? Fast displacement. That's strong. That's just another strong bias for me that tells me the price wants to continue going higher. If we just chop, that doesn't tell me that price wants to continue higher. Like, look at this. One clean candle. That's what I want to see. That's an A+ trade right there. Boom. And what I would do, I would enter on the candle closure, put my stops at these lows. You can put it below the FEG if you really wanted to, but I trade for 1-to-1, and then boom, that's it. And then I'll target this recent high, or I could even target the draw on liquidity up here. But it was already a bit late into the session. It was around 2 a.m. for me, which is around, I think, like, it's like 11:30 for New York Open, but you can always target draw on liquidity, and guess what? TP would have got hit. As you can see, clean. This would have been a 2 RR trade, but I had to go to sleep at school the next day, so I took profits early at this high right here. Still a 1-to-1 RR, but if you guys were up, this would be the ideal trade, targeting the draw on liquidity, which was all-time highs in this case. And look, look at this, clear trade, not a single thing in drawdown. And if I was targeting this draw on liquidity, I would go break even at this high here, just so this trade is risk free. This is how you do risk management. This is my A+ continuation model that's made me over $5,000 as a 16-year-old day trader. It's simple. You just want to see fast displacement, draw on liquidity, pullback, IFVG. Easy. It's not that hard, guys. You just got to stick to your rules, stick to your model. If you don't see any of this, don't take a trade. It's worked for me. In the last 2 weeks, I've been able to make $5,000. I've also been able to buy myself the new iPhone 17 Pro, which is pretty cool. But yeah, if you guys want to be not tutored, if you guys want to get one-on-one mentorship where I go even more in-depth in my model, where I actually go through every trade recap, why I took the trade, it's more in-depth, and my discretion as well, you can always join my Discord, my premium Discord. It's a link in bio, link in description actually. But yeah, you guys can join that. But as you can see, this is A+ trade right here. A trade that I personally took as well. I think I made $1,000 on this trade. But yeah, great trade. Yeah, that's my continuation model, guys. If you guys have any other questions, please let me know. Link in let me know in the comments below. And yeah, if you guys like this, like, comment, subscribe. Yeah, I'll see you guys in the next video. Take care.